Okay.
Right. Are
we there?
Are we at all-time highs? Can we get the Nifty 50 up?
Oh, it is at all-time highs.
Yes, we have hit
we
record
are.
highs.
There you go.
Okay.
All right. There we have it. Wait, guys.
You've got it upside. There you go.
Wait, I think I'm going to stand for this.
Yeah, okay, you might have to.
Okay.
There you go.
Okay, we've hit.
We are at all-time highs for the Indian markets. This is a moment to cherish.
Woo! Okay,
Let's celebrate. Okay, did the confetti come on the screen?
We're
Yes,
having our
perfect.
own
Thank you.
party this
Let's get the
morning.
confetti up on the screen.
We knew it was coming, and so we prepared. There you go.
Okay, coffee cheers, guys.
Coffee cheers.
This is,
Okay, there
just
you go.
for the Indian markets because it means so much
Cheers, guys.
for investors, for the economy.
Yeah.
It's not about just a number over there. And yes, those all-time highs will come. There will be many more records there. But the fact that this has been a long-fought battle, it's come after reform.
Yeah.
Pushed by the government. It's come after an RBI governor has also given that support. And it's come despite no trade deal.
Yeah. I think more than anything else, it may just be 1/3% up on the screen, but I think
guys,
the celebration is
because
of the...
I think we missed the confetti. I think our viewers missed this. We need to raise this again. We are at all-time highs. Come on, let's get this up and going.
Okay,
Because the confetti missed it. Let's get the long screen. Let's get the all-time highs because this is momentous.
Wait, I have to make sure it's aligned properly.
Yeah, let's do that.
Okay.
We are at all-time high.
There you go.
Let's establish that. Now,
And, Alex is trying to anchor by peeking through the back of the board.
okay, thoughts?
No, so like I was saying, 1/3%, it's not the biggest move. But I think more than anything else, what Tamanna was talking about, right? You've had a setback, 50+% tariffs. And in that interim, you've had the government that sprang into action, GST 2.0. And yes, on the manufacturing side, you have had a few disruptions heading into that. But all told, the earnings picture was fabulous in the second quarter, significantly better than expected. And almost all of the corporates that we've spoken about are confident that H2 is going to be better than the first half. So it's not something that is simply sentiment driven. It is driven by fundamentals and earnings. And I think a lot of global investors, global watchers are also buying into that now.
You know, we need to get guests going as well. But I remember Shrikant Chauhan saying that this is a time to buy. And as we've hit these all-time highs, this is a moment to celebrate. So Avinash, Shrikant, I'm sure you're celebrating with us. You know, Shrikant, what's your call right now? Would you go out and go long on the indices? We are at 26,275, so circa that previous all-time high levels.
Yeah, with a positional view, certainly we should look for adding long positions even at current levels. The reason is because after a very long time, the market has crossed this level. And for crossing this level also, if we see the technical pattern of last, let's say few days, then it was like just consolidating. So after the consolidation, whenever we see such type of activity, we see further more activity in the market. So we may see some more gap up openings in the near term. That's my view. And eventually, at least we are heading for 26,500. That's my view in the near term. There, I think we can see some resistance in the market because now the resistance have shifted from 26,300 to 26,500. So the next level would be around 26,500 and 26,000 is going to act as major support.
Okay, got it, Shrikant. Avinash, very quickly, 20 seconds. One stock that you would recommend people to buy. One stock, Avinash. One idea.
No, I think from the auto pack, I think we still remain positive on Mahindra and Mahindra. I think very strong earnings growth expected, and I think very strongly positioned in the automotive market. So, you know, around 3,900, 4,000 is a very possible target. And we have been telling our clients to accumulate this on every day.
Both of you, thank you so much for taking the time out and being with us. Ajay Srivastava is with us to talk about this momentous occasion as well. Ajay, great having you. Thank you so much for taking the time out. And, you know, yes, it is just a number. We'll move on from this to newer levels, newer milestones. But it's a big number considering that a lot of things haven't gone India's way. And in the whiff of the first point of good news, we've now eclipsed the previous highs or touching them right now. How do you feel about this?
I think I feel relieved. That's the only word I can say, relieved, because it's been a very, very bad year for all of us that we're not able to kind of cross the index. Not because India has done poorly, because everything else did so well. And that's been the biggest troubling factor for all the fund managers and investors is that, you know, how do we keep invested in a market which doesn't do as well as all other global markets? So I think it's a great relief that's happened. But it's happened on a background of high valuations. So I would like to temper some enthusiasm and champagne corking that the market is overheated. The market has got its valuation. They got good pockets as well. But like all markets, you buy euphoria and you sit and wonder why you bought it. So I would still say it's a great event, but temper your enthusiasm because life is difficult on the other side with rupee closer to 1991. And you know what's happened to gold and silver prices at the end of the day. The hedges continue to outperform. So temper enthusiasm, celebrate today, but this is not a champagne corking enthusiasm because 1 year is a big wait for us.
And important points that you're raising right now. I think more than anything else, the celebration that we had today was because we reached this point having fought quite a bit to get here. And the question I have for you though is the big trigger point beyond earnings is going to be that trade deal. Is this a precursor to that, do you think? And do you see significantly higher levels if that major setback is out of the way?
I think, yes, there's a relief in the market, but we must understand that the impact of exports and to the US in particular is not that large on the economy. Our domestic consumption triggers are far more important. So psychologically, yes, a trade deal can open up a lot of windows for people to start buying. But does it materially affect the economic situation of most companies? The answer is no. Yes, perhaps few export-driven companies, it does affect them. But by and large, on the basket of Indian economy, the impact is not so material. Psychologically, yes, but practically, it's not such a material thing. Also remember that while we compete in the US market, there are other countries also competing and taking trade deals in the market. So yes, 25% punitive tariff will go away, so companies will benefit. But to expect a major change in economic fortune, I don't think so it will happen. Psychologically, we all feel happy that one less impediment to our market. Yes.
Okay, we want to welcome NDTV 24/7 viewers to our programming. Here's what's happening. The Nifty has hit an all-time high after a long wait of 14 months. And in this time, there have been wars, there have been geopolitical shifts, and there has been a tariff war which has played out. India is one of the few nations that doesn't have an India-US trade deal, and despite this, Nifty, which in a sense is a reflection of the sentiment economically of the people of this country, has hit that all-time high. So it is a hard-fought and hard-won peak for the Nifty. Now, here's what the journey has been like, and we'll just pull up that Nifty milestones chart for you. 27 September 2024 was when we hit that all-time high at 26,277. And then there was a trough on the 7th of April 2025. This was at the peak of the stress when it came to the trade deal. Since then, we've climbed up. The journey to that all-time high is what is important, because what has happened since then? What has happened since then in terms of the government really acting? And apart from other things, there has been reform that has come in. There have been GST changes which have been made, spurring consumption. So all of those factors have contributed to this. There have been cuts from the RBI as well, which has helped the industry move, and corporate results have reacted as a result of this. In fact, we have Avinash with us, we have Shrikant Chauhan with us. Shrikant, I think you have been proven right this morning. Shrikant Chauhan came out and first said that you're going to see this very close to opening. I'm checking, do we have Shrikant Chauhan with us? No. Okay, we're very close to opening, and that is exactly what has happened.
Yeah, what I find interesting, and let's pull up that milestones chart, because 21,743 was that trough that you saw on the 7th of April 2025. There was a lot that was happening with regard to geopolitics as well. Remember that. And this is when you saw your sentiment at an all-time low. A lot of investors in the mutual fund space also maybe wondering what to do with their long-term SIPs, pulling things out, stopping SIPs. And so it's taken quite a bit of a trudge to get past those levels. And then if you look at the time frame, I think if you imagine that would have been about September or so, where you saw once again a drop from the high point, right? And the recovery from that point, post the Q2 results, has been quite tremendous. The question, though, Neeraj, Tamanna, is where do we go from here? Because this is very clearly a recovery of 18% from the 52-week low or thereabouts, maybe a little more than that for the benchmark Nifty 50. And as we've been speaking to our experts that have spoken to us today, it's a large cap led rally so far. Where does the broader market come in, and do we see the depth in the rally going forward?
Some interesting data for you. It's taken 289 sessions to hit this new all-time high at this point, and stocks which have contributed to the all-time high, that's what you should look at. Bharti Airtel, ICICI Bank and RIL have contributed the most in that time. So that is an interesting one. So it has been the heavyweights which have pulled up, obviously, because we're talking about the Nifty. But what about the broader markets? And I want to pull this to the broader markets as well. Stocks which are at a 52-week high from the NSE 500, because remember, your exposure to the Nifty is limited to, say, if you're in a Nifty ETF. Otherwise, if you have a broad-based portfolio, the Nifty at an all-time high is something to cheer, but maybe your portfolio is not doing that well. Although today is a day for everyone. Your Nifty Auto has also hit a record high. But MCX has been one of the gainers which are at a 52-week high from the NSE 500, Shriram Finance, AB Capital, Hero Motocorp, AU Small Finance Bank, GMR Airports, IIFL Finance, Reliance Industries, of course, PTC Industries, Max Financial, and Larsen & Toubro. I want to see how the mid-cap and small-cap are doing, frankly, because we should pull up those charts as well. At that same time, did you see the mid-caps and the small-caps performing in the same way? So the Nifty mid-cap 150 also up there, but if you can put it on a chart with the Nifty, we will get a better idea of the bulls really roaring and whether that's happening on the broader indices as well. So the Nifty mid-cap has gained 0.37% in this time. And you have the small cap also, which has done okay. The small cap has also done fine. The small cap losses, though, have been high at 8.5%. So this has been a nifty story overall. Saurabh Mukherjee, founder and CIO of Marcellus Investment Managers, joining us this morning. Saurabh, great to have you on. All things considered, this feels even sweeter, I suppose, simply because ये हम बोल सकते हैं, this is Indian investors के दम पर. FIIs have not participated in this.
Yeah, so look, I think we discussed this on your channel 3 or 4 weeks ago, right? So I was saying that if we get a double-digit earnings growth this quarter in the Nifty, which I'm pretty confident we will, right? The September quarter was weak again, but I think December quarter for Nifty earnings growth will be strong. Plus rate cuts from RBI, Federal Reserve has also started cutting, and plus the US-India FTA, right? 3 such boosters, powerful boosters, should take the market forward. But we also need to temper our enthusiasm a little bit. Across the world, most markets are hitting all-time highs. So after a long time, after a, I think, 18-month gap, India is participating in the global equity rally. We've fallen behind for the best part of 2 years. Thanks to the tax cuts, thanks to the RBI cutting cycle beginning, we are finally catching up with the global equity rally.
Morning. The question, therefore, at this point is, where do we go from here? Because we're celebrating, yes, it's 0.33% higher for the benchmark, and we moved, 18+% from the low point of the last 1 year. But the question is, do we see that broadening? And that earnings trajectory, of course, is most important to watch out for. Would you agree?
So I would completely agree. I think we've had single-digit EPS growth for the Nifty for the last 9 quarters. This quarter, hopefully, will be the beginning of a Nifty earnings revival. If that's the case, right, I'm really, really hopeful that is the case. If that's the case, I think we should see large caps continuing to do well. I think high-quality banks are relatively cheap. The big IT stocks are also sensibly priced. Pharma names are continuing to do well, both domestically, but I think the export-oriented pharma names will do particularly well. So plenty of reasons to believe that large caps will do well. Small caps, the valuation challenge remains, even if earnings are actually doing reasonably well for small caps. Small caps, the valuation challenge remains. Large caps, valuation is attractive, and if Nifty comes out 10-11% earnings growth over the next year, I think all of us can look to reasonably good gains on large caps over the next 12 months.
Saurabh, in some sense, good morning, Neeraj here, of course, and thank you for joining. In some sense, a lot of people who have been negative for the right or the wrong reasons, independent of that, are starting to turn constructive as well. Would you reckon that if the FI money starts to trickle in, then we may not have a labored next 12 months, but a fairly brisk uptick as well if things fall into place, including the trade deal?
So whilst I would love to believe that will be the case, it will be a brisk 12 months. What I think we need to remember is valuation multiples are significantly above long-term averages, especially so for small and mid caps. So if you assume that there will be the P multiples don't re-rate, and assume Neeraj we get 10-11% EPS growth, then I think EPS growth will be broadly equal to the gains we get over the next 12 months. And thus, anywhere between 8 to 12% is I think where we should end up between now and say next Christmas. Broadly speaking, our gains will be equal to earnings growth rather than further PE multiple expansion this point in.
Got it. Okay. Okay, Manish Sontalia is also with us. And Manish, thanks for joining in. Saurabh Mukherjee was making this point that long-term multiples for the SMIDs are elevated, and therefore the chances of a brisk up move is an opinion which is at best not a certainty. How would you react at all-time high levels currently, and considering the fact that a lot of things are falling into place? Do you anticipate a swift further up move, or could it be a labored one?
So, the valuations of mid and small caps are in line with, long-term averages. The median PE multiples of the mid cap index or the small cap index is not very significantly different from where we are currently. And I would reckon that it is more of a pick and choose. Generalizing the entire space would not do good justice. There are enough companies which are reasonably valued and they have superior growth. It is a case of a stock picking, and even in the large cap space, not everything is cheap. Just to generalize that everything in the large cap space would tend to do well, I wouldn't agree to that. I would believe that, again, in the large cap space or the mid and the small cap space, it is specific pick and choose. And at this given point in time, I think rate sensitives are the most favorably placed. Whether it be the large caps or the mid and the small caps, rate sensitives would tend to do better than the rest of the
Okay, so Manish, and good morning to you. Let me extend that talking point then. If rate sensitives are the ones to bet on, and if you have the kind of weightage that they have on the benchmark, the corollary to that is that we could be heading higher, right? Assuming that the earnings potential is there, and assuming that there will be more buyers from outside in as well, and they do tend to go towards the financial space and the large banks at that. What is your own expectation for the private banking space, perhaps, or maybe even the PSU banks?
Both of them are very reasonably valued. I mean, at 15 times, 17 times, the banks are the most favorably placed, whether the large cap or the mid cap, and whether the private sector or the PSU space. And because you will have a push in terms of credit growth, and also that there is going to be further impetus that is going to come from the consumption front as